Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Monday, the 12th of February. My name is Russell Shaw. I am a senior market specialist at FXCM. I'm just going to go ahead and bring up our disclaimers. All right, I'm going to just keep this high risk investment warning on for a few moments. Okay, and here is our market commentaries disclaimer. I'll keep this on screen for a few moments as well, if you can have a read through that. All right, and let's go ahead and bring up the real rate. That's where we shall start. Okay, so we're taking a look at the real rate. This is on a weekly scale, and the rate's moving up. Okay, can you guys see that the direction's tending towards the northeast? Okay, and then there's something that I want to just highlight here. Raj saw it last week, and that is effectively that we've got this bullish reference candle in. So what's a reference candle? There's three conditions. The first condition is that it as the reference candle has the lowest low in a cluster of three candles, and then the candle to the right of the reference candle, condition 2, moves above its high, and condition 3, it closes above its high, and that's now locked in on a weekly scale, and that's something that we've got to keep our sort of analytical minds tuned to, because the fact of the matter is, whilst reference candles themselves don't necessarily mean there's going to be a swing. If there is going to be a swing, it starts off with a reference candle. So the reference candle's in. Now, I don't know how much higher. I don't know how much higher the real rate can go, because we're in a loosening environment. Over the course of the next few months, we should see the rates decline. But at the moment, as you and I are speaking, there is an upwards bias. Hey, Anna, good morning to you. And thank you very much for signing, and pleasure to have you on the webinar. Hey, Raj, good morning to you. Take a look, guys. Take a look at the... let's just fix this rectangle up. You can see that we've got the RSI popping above 50. So as soon as we have the real rates showing some sort of positive buoyancy, positive momentum, something we'll just have to note at the beginning of this week. And we want to see if there is going to be any more pressure to the upside, or if in fact there is going to be some sort of respite. Hey, Kim, good morning to you. Let's just go through the calendar for the week. All right, I'll just take out some of the key items that I think we need to keep an eye on, and starting with Tuesday, tomorrow, 3:30 p.m. ZA, which is 1:30 p.m. Hey, KD, morning to you. 1:30 p.m. GMT, we'll have the CPI coming out tomorrow. That would be the US inflation numbers. On Wednesday, at 9 a.m. ZA, 7 a.m. GMT, we'll get the UK inflation numbers. Keep that in mind. On Thursday, we shall get employment numbers out of Australia overnight. We'll get the GDP numbers Thursday morning, 9 a.m. ZA, 7 a.m. GMT. We'll also get later on Thursday at 3:30 p.m. ZA, 1:30 p.m. GMT core retail sales and unemployment claims. And then, and those are out of the US, right? We'll get retail sales actually out of the UK on Friday. We'll get core PPI out Friday afternoon, and then University of Michigan. So, look, the inflation data is going to be massive, right? Retail sales is going to be important as well, but we just want to keep an eye on the inflation. And if we get a surprise to the upside in inflation, then I think we carry on with some sort of upwards trajectory. But if we get some sort of moderation, we should get sort of a moderation in the inflation data. So, look, guys, what's the big deal about the real rate? Is that the real rate's a key driver of the markets. And what we want to do is just take a look and see how the US dollar is looking at the start of the week, given the fact that the real rates have been pushing up. So let's just start off the analysis with the US dollar on the weekly. So we'll start off our top-down analysis with the greenback. And let's take a look. This is the weekly chart of the US dollar. Now, take a look. Where is it relative to the 30-week exponential moving average? The 30-week exponential moving average is below price. So price is on top of it. So there is some sort of bullish position of the US dollar relative to the 30-week exponential moving average. The 30-week exponential moving average starting to curl. There is, of course, this upwards movement in the greenback. So as the real rate has been pushing up higher, so the US dollar has been moving up high. In fact, the US dollar has been leading the real rate somewhat. What is interesting is the candlestick for last week. Let's just zoom in. What kind of a candlestick do we have for the US dollar on a weekly basis? Well, we actually have a bearish candlestick. Just to start off the week, let's analyze last week's sentiment based on the candlestick. And it's what we call a gravestone doji, right? In other words, bulls took the US dollar up until the high of last week. Then they subsequently lose control to the bears, and the bears push price down. And we're pretty flat on the week with a selling tail. Now, this is the question that we got to ask ourselves. Is last week's US dollar candle a reference candle? If it's a reference candle, what we need to be looking at is the three conditions. So we've got condition one potentially, and that is that we've got the highest high in a three candle cluster. Truth be told, we got to just see how this week pans out. If it drops below the reference candle, that would be condition two. And if it closes below the reference candle, which we'll only know at the end of the week, then potentially we've got some sort of turning point here. What's going to be interesting is just to see how the US dollar is looking at the end of the week in conjunction with the real rate. Okay, because there is an upwards bias in the real rate. There's an upward bias in the US dollar. My feeling is, and it's sort of very hard to see the US dollar moving up, to see real rates moving up, when my opinion is that we should be seeing some sort of moderation, because inflation is coming down, and the job market cooling somewhat, despite the non-farm payrolls, which I think was an outlier. So I think the CPI data that we're going to see this week is going to be absolutely crucial in terms of whether we do get further moderation. And my feeling is that we are moving towards that. that target of 2%. Okay, so just to start the week, we do have a lower looking US dollar. Now, what we'll do is let's just take a look at CPI just to see how the core CPI, headline CPI, is looking. So what we'll do is just go through to the ticker and just type in there United States inflation. So we'll take a look at the headline inflation first. Okay, so let's just bring that up. And so you can see that the headline inflation is it did kick up on its last print, but what I'd like to see, just let's put in some peaks and troughs here, and what I think would be ideal, okay, from a headline point of view, is let's put in a peak over here. Let's put in a peak, okay. Let's put in a trough. Okay, let's put in a trough. Hey Graham, good morning to you. Nice to have you on the live stream. Yeah, we'll take a look at S&P for sure. Okay, so we've got peak, trough. All right. Now what we're going to see is whether we have a lower peak here or not. Okay. So if we get a lower peak here in the inflation rate, and then some sort of further moderation, okay, sort of towards that 2%, that key 2%. This is on a headline basis. Okay, let's just take a look at it on a core basis. So what we'll do is just put in your United States core inflation, right? Let's take a look at that. Just click on that. Here it's smoother. Okay, we are seeing the moderation. So when we take out energy and sort of volatile items like food, the inflation rate is showing more inclination to moderate towards that 2%. Let's just see now if that headline rate gets in that lower peak and pushes down, right? So that's going to come out tomorrow. What's the big idea behind that? Let's go back to the US dollar. Okay, let's just bring that up. In that the US dollar showing the start of a potential turning point. Here is condition 1, the highest high in at least 3 candles. And now we're looking for the other 2 conditions. Condition 2, price going below the low. And then we'll know at the end of the week whether we're closing below the low of the reference candle. Then we've potentially got that. Reference candle locked in. All right. So let's take a look at the US dollar on a daily basis. Let's see if that's giving us any other, and then we'll take a look at S&P. Okay. All right, you should be able to see the daily chart now. Okay, so we drew in this resistance area quite a few sessions back. It looks like the resistance area is holding. What would be interesting is to see the US dollar move from zone 1, which is between the upper blue and the upper red, down into the neutral area, zone 2, between the 2 blues. So that would be a relative movement of weakness. Okay, and what would be interesting is if the dollar is moving down, almost anticipating a moderation of a moderation in that CPI. What would be interesting is if the CPI comes in hotter than expected, then all bets are off. Then we see the US dollar jump. Then I think we start seeing some headwinds come into that risk market. Okay, so what we need to see, yeah, I did see Palantir. Sure, saw Palantir. So there's a whole lot of AR that there's sort of a whole hot. But C3 is lagging. Graham, you're going to have to tell me what C3 is. All right. So you can see that zone 1 sort of potentially moderating into zone 2. Okay. But then, of course, if that inflation, okay, that inflation comes in and moderates, we see the drop down. And if it comes in higher than expected, all bets are off. Okay. All right. Let's just take a look at the S&P 500. It's hit 5,000, right? It's just at 5,000. Let's just go back to the weekly chart here. Let's go to SPX 500. Okay. 5,028, but we're overbought. Okay, see there, we're overbought. It's going to be very interesting to see the interplay. Okay, we're going to see the interplay. Okay, we're going to have to see the interplay of going to have to see the interplay of inflation. Does it moderate? Does it beat expectations? And how that comes in and interacts with the S&P 500. Regardless, we've got an overbought condition here. Now, it's on the weekly. We know that weekly overbought conditions are inherently difficult when it comes to timing. Okay. Sorry, Anna. Okay. You guys see it? All right. So let's just take a look on the daily chart. So on the daily chart, we've also got an overbought condition. It seems to me that there's going to be some sort of normalization on the S&P 500. It just seems that the RSI is got into that frothy area, and if the RSI goes into that frothy area, well, it wouldn't be out of scope to suggest that there's some sort of near-term ceiling, okay, at 5,000. Well, that makes complete sense. Why would it make complete sense? 5,000 is a psychological number. Round numbers are psychological. Could see some sort of resistance coming in, knocking us back down towards the moving averages. Okay, moving us back down to, and then getting the movement back up. Okay. Guys, I'm getting a whole lot of messages here. Can't see charts, stream stopped. Can I just double check that everybody's with me on the S&P 500 daily chart? Can everybody see me? Can everybody see it? All right, let's turn off the camera. Let's turn off the camera. Let's see if that helps. All right. Okay. All right. We're all good. All right. Let's go back. All right. So we've got this overbought condition on the S&P 500. Let's see the interplay between the overbought condition, the 5,000 level, as well as the inflation that comes out tomorrow. All right. KD saying he cannot hear. Can you guys hear me? Seems to be a whole lot of technical issues now. Can you guys hear me? Testing, testing. Okay, cool. All right. Let's see here. Graham saying he's seeing a 5% correction. All right. Let's take a look at the US dollar. Beg your pardon. Let's take a look at the SPX 500 on the daily side. Let's bring that up. All right. So we're in zone 1, and here's the overbought condition. And I just wonder if perhaps we get a movement from zone 1, moving back to zone 2, and then invariably getting the dip in the uptrend. So what I would do is I'd look very, very closely to any sort of pullbacks here, see if we can get some sort of dip in the uptrend like that. Okay, but that's going to be a movement from zone 1 all the way through to into zone 2. Okay, so we'll just take a look at that. All right, let's take a look at NASDAQ. So NASDAQ, we're not quite at overbought yet. But we're tending towards overbought. So we've got the S&P 500, which is overbought. And then we have the NASDAQ, which is tending towards overbought. And we've got the S&P 500 at that psychological 5,000 area. So again, I wouldn't be surprised if we get some sort of moderation in the movement from zone 1 to zone 2. Again, getting a movement from zone 1 through to zone 2 sets up the potential dip in the uptrend, right? So we kind of now got to be quite patient just to see how the oscillator plays out. In effect, there has to be the movement from overbought to normalization, support coming in, and then the movement from support taking us back up. All right, let's take a look at gold. Let's take a look at one more chart. We'll take a look at gold. All right, so here's the gold weekly chart. What's going to be interesting to see if the US dollar does moderate tomorrow off of the inflation data. If it moderates off of the inflation data, we should see some sort of kick up here in gold. Where is gold relative to its 30-week exponential moving average? It's above its 30-week exponential moving average. 30-week exponential moving average moving in that northeasterly direction. What we can do is we can just keep an eye on the RSI to see if there's going to be an RSI break to the upside. So if we get some sort of movement like this in the RSI, US dollar comes down. What would be driving the US dollar down? Effectively, I'm looking for a moderation in that inflation rate. So gold here is something I just want to keep an eye on, taking a look to see if it breaks on the RSI trend line to the downside. Let's just take a look at gold on the daily chart, and you can see that there is really a compression. You can see that there's really a compression in the Bollinger's, isn't there? There's a compression. Now what we're going to do is we're going to just add in the Bollinger Band width indicator. So just click on indicators here. Okay, just go in Bollinger. Go in Bollinger Band's width. Okay. And what you can see here, let's just make this easier on the eye. I'm going to make this black. And what you can see is that the Bollinger width indicator has now really shown us a squeeze. Okay, showing us a squeeze. And what's interesting is that when you get some sort of squeeze, as we're getting, when it starts breaking out, okay, that's when we get movements. We get volatility movements. It just so happens that the last two, even the last three, were breakouts to the downside. But what would be interesting to see is when we get a breakout here, and if the dollar is coming down, then potentially a breakout to the upside. Okay, so we'll just keep an eye on gold just to see if there's going to be a breakout here. You can see that the Bollinger width really has given us a squeeze. Let's wrap up here. I just feel that the technical issues today kind of threw me for a little bit of a loop, so I apologize for that. I'll recompose. I'll come back tomorrow and we'll take a look at the charts again tomorrow, same time, 7:40 GMT, and hopefully we won't have all these technical issues, and then we can just do a more, I guess, forceful type of live stream. So apologies for the technical sessions today. Let's leave it over there, guys. Thank you very much for joining me this morning. Hitchcock, I beg your pardon, Graham, if you can tell me what that C3 is, I'll be interested to look. I trying to look for that C3 ticker. I just don't see it. The